Hi, this is Zach from Zach's Traders Cafe with a look at some bulletin board hero stocks on Tuesday, the 31st of May. Starting off with 88 Energy, and here you can see that it looks as though after this extended consolidation since early April, shares are ready to take off again. 20-day moving average at 1.93. We closed just above that on Friday. Resistance at 2 pence and 2.1 pence. So if you're cautious, you wait for a clearance of the 2.1 pence zone on an end-of-day close basis, and probably also RSI 50 being broken versus 46 at the moment. But otherwise, any dips or weakness towards the 1.9 pence zone currently regarded as a buying opportunity. Stop loss back below 1.7 pence, which is just below Friday's low. Initial target 2.5 pence, the 50-day moving average. Then after that, we can start thinking about the 4 or 5 pence zone as the upside over the rest of the summer. Advanced Oncotherapy is next, and here we've had quite a difficult road, I suppose, over the early part of the year, but gapped higher last week through the 50 and 200-day moving averages, and that does suggest that we can sort of start to raise our targets on the stock above the floor of the gap around the 7.08 pence level up to 10 pence, which would be the top of this rising trend channel in place since as long ago as the autumn. Next up, a stock which is say relatively obscure but still in focus on Twitter, Canadian Overseas Petroleum. This looks like a positive consolidation here after the gap through the 200-day moving average in March. We've never needed to test that 200-day line at 2.88 since. Just as little as an end-of-day close now above the 50-day moving average at 3.89 pence should take us up to the assumed target as high as 6 pence, the top of the January trend channel, over the next month or so, or the following month or so. Moving along to another Twitter favorite, and comes in the form of Highlands Natural Resources. Had the target first as 40p, then 70p. That's been exceeded too. The question now really is how far the stock will retrace before a new leg to the upside. Well, that's the hope at least. Trend channel heading towards 80. Probably at this stage one would be eyeing up the area of the last gap to the upside, which was around 46.84 pence. Also the area of the 20-day moving average at 47.71 pence. So if you're patient, maybe wait for any dips towards that zone, maybe down towards the low 50s, 10-day moving average at 52.8 as well. So that is something to look out for. Otherwise, best case scenario is that there won't be any sustained price action back below that initial May peak at 58.50 before we head back up to 80 pence again. On to Keras, which has been a great performer of late. Consolidation has been the name of the game since early April, and what we really want to see here is an end-of-day close back above the 50-day moving average at 1.21 pence, and assume that while we remain above a penny, which has been the area of the support over the last couple of months, the shares are capable of retesting the best levels of the year towards 1.8 pence over the summer. Obviously, the point here on a technical basis, looking at the RSI indicator, is that we'd like to see that back above 50 after the break of the RSI uptrend line from August in early April. On to stock which is not normally looked at in this area, Ofer Energy, but it was a big mover earlier this month. Still want to see a clearance or a sustained price action back above 71.19 pence, which is the old February peak, and also February floor rather, and also RSI 50 versus 46.76 at the moment. If we can do that over the next few sessions, i.e. the rest of this week, then we'll be looking for an attempt on filling that gap to the downside from 80 pence plus later in June. That's it from me. More updates at the same time tomorrow.